Greetings for the day, students. I am CA Ashna Sharma and I will be taking your CA Foundation class in Accountancy. First, we will start with Unit 1, Meaning and Scope of Accounting. I have divided this into two portions. So, this is the first portion in which we will be discussing 5 questions. What is accounting? What is accounting procedure? What are the objectives of accounting? What are the functions of accounting and the concept of bookkeeping? This is a very simple concept as you have all done this in 11th or 12th standard. But it is important that we revise all these concepts for better understanding. So let us see. What is accounting? The Committee on Terminology set up by the Institute of Certified Public Accountants, that is CPA USA, states that accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. Students, it is to be noted that this definition came in 1961 and after that accounting has seen many evolutionary changes, so there is a broader dimension which is related to the concept of accounting which we will also be discussing. So let us see this definition in detail. What is recording? Recording is passing entries in books of accounts, which is called as journal or subsidiary books. It is also known as primary books of accounts. Then the second step is classifying. Classifying means posting the journal entries in ledger, which are also known as secondary books of accounts. And the third step involves classifying. It means preparing the trial balance, cash flow statement, profit and loss account and balance sheet. So now we have seen what is recording, classifying and summarizing. We move on to the next line, which means money, transactions, events. Money, it means measurement in ruling currency. So the Indian financial statements would be represented in the ruling currency rupees. The US financial statements would be represented in the US currency, that is US dollars, and the UK financial statements will be presented in the UK currency, that is pounds. So let us understand what is transaction and what is event. A transaction is a business performance of an act or an agreement. If I say it in literal words, it means lena or dena. Take and give is transaction. What is an event? An event is a consequence or result of a transaction. Let us understand this with the help of an example. Purchase of good is a transaction which involves two things, take and give. Take money and get the goods. Similarly, sale of goods is a transaction which involves give the money and take the goods. Ending inventory. Ending inventory is an event which has arisen from a transaction like purchase of goods. Profit and loss on sale of goods is also an event which has arisen from the transaction sale of goods. Now students, it is important that you understand the difference between the transaction and event, because in exam you might be asked questions where you would be given some transactions and events and you have to identify whether it is a transaction or it is an event. So I hope that you are clear with this concept. Transaction means where there is take and give, whereas event is a consequence or result of a transaction. Now the third line states which are in part or at least of a financial character, interpreting the results thereof, and then there is a broader dimension of it. Now let us look what do these three lines mean. Financial character. It means that it should have some portion of financial character in it. The examples could be financial is disposition of a branch, whereas non-financial could be inauguration of branch. This does not involve any financial transaction or event. The second part is interpreting. Interpreting can be defined as the final function of accounting. Financial statements should not explain only what has happened, but why it has happened and what is likely to happen in future. It enables the end users to make a meaningful judgment about the financial condition and profitability of business operations. Suppose, if in the current year my profit is 10 rupees, then I should be able to make a meaningful judgment whether in the next year the profit would be decreasing or it would remain the same or it would be increasing. The third step is broader dimension. As I had told earlier, there is a broader dimension to the accounting concept, which means communication of financial statements or financial information. The entire process of accounting is irrelevant if we do not communicate the financial information to the end users. These end users could be internal or they could be external. By internal users, I mean the shareholders, and the external users could be the government or the regulatory authorities. So by now, we have done all the lines. What is accounting? It is the art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part or at least of financial character and interpreting the results thereof, and we have seen the broader dimension of accounting, which is communication. So you should be familiar with all the red points in the definition so that you are clear with it, and I have discussed all these red points in detail. So now let us move to the next question, which is what is accounting procedure? Accounting procedure has two steps. First is generating the financial information and second is using that financial information. So, generating the financial information has three steps. These are recording, classifying and summarizing. What is recording? The business transactions which are entered in journal and are supported by original documents like sale bill, passbook, salary slip is called as recording. What is classifying? Grouping of transactions of similar nature in ledger is classification. Example could be all the salaries and wages which are posted to salaries and wages account is called as classification. Then is summarizing, preparing and presenting the information which could be in trial balance, profit and loss account, balance sheet and cash flow statement. Second is after the generation of financial information, we also need to use that financial information. So it has three steps: analyzing, interpreting and communicating. Analyzing is methodical classification of data in financial statement. Example, classification of expenses as factory cost. Examples could be wages paid to the laborers, electricity expenses paid in the factory, etc. Administration cost. Examples could be rent, general administrative expenses, and the third one is finance cost, which could be interest paid on borrowings, interest on overdrafts, etc. Then is interpreting. We have discussed interpreting in the earlier slides also. It is the final function of accounting. It enables the end users to make a meaningful judgment about the financial condition and profitability of business operations. And the last step of using the financial information is communicating. It means transmission of summarized, analyzed, and interpreted information to the end users, which could be internal and external. Examples we have discussed in the previous slides. Now let us move on to the next question. What are the objectives of accounting? There are 4 objectives of accounting. These are systematic recording of transactions, ascertainment of results, ascertainment of financial position, communicating information to various users. Systematic recording of transaction could mean bookkeeping, it also means passing of journal entries, ledger and trial balance. Ascertainment of results could mean preparing the manufacturing, trading and P&L account, and ascertainment of financial position could mean preparing the balance sheet, and communicating the information to the various users would mean preparation of financial statements. So we have covered the objectives of accounting, the 4 points which are discussed in the slide. Now let us look at the next question. What are the functions of accounting? Functions of accounting means measurement of past performance and current financial position. Forecasting means future performance and financial position using the past data. Third point is decision making. It helps in providing relevant information to the users so that they can better make decisions. Then is comparison and evaluation. It helps in comparing the actual versus targets, and it also helps in assessing the results. Fifth point is control. It helps in identifying the weaknesses in the operational systems and also provide feedback on how to correct those operational systems. And the last point is government regulation and taxation. It provides information to the government to control and also helps them to generate the revenue by collecting the taxes. Since these points might be little difficult to retain in your brain, so I have prepared a trick to memorize this one. I will be saying this in Hindi. The phrase is as follows. Past, current, फ्यूचर परफॉर्मेंस से यूजर एक रैशनल डिसीजन लेता है. पास्ट, करंट, फ्यूचर परफॉर्मेंस से यूजर एक रैशनल डिसीजन लेता है. कंपेयर, इवैल्यूएट, कंट्रोल करके गवर्नमेंट रेगुलेट एंड टैक्सेस कलेक्ट करती है. कंपेयर, इवैल्यूएट, कंट्रोल करके गवर्नमेंट रेगुलेट एंड टैक्सेस कलेक्ट करती है. So here the past and current performance is the first point, future is the second point, rational decision is the third point, then is compare, evaluate. Compare, evaluate is the fourth point, control is the fifth point, and government regulate and taxes is the sixth point. So I hope this small mnemonic will help you to memorize those 6 points relating to the functions of accounting. Now we move on to the concept of bookkeeping. Bookkeeping is recording of transactions and constitute as a base of accounting. It is to be noted that bookkeeping is a smaller concept in relation to accounting. Bookkeeping is just concerned with recording of transaction, whereas accounting is a whole process which we have discussed in the first question. The concept of bookkeeping also has 2 objectives. These are complete recording of transactions, and the second point is ascertainment of financial effect on the business. So I hope I have clarified the concept of bookkeeping, and bookkeeping is a smaller concept in relation to accounting. So I hope that these 5 questions are clear to you and you would be looking forward to my next video. Since this is my first video, if you have liked the video, then please subscribe and share the video, and Also tell me any areas of improvement which could be taken into consideration for our next video. Thank you for patient listening. Bye bye students.